It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, smartest guy in the room, Mr. Michael Becker. Michael, how are you?
Hey, Paul, doing pretty good. Weather's starting to cool off a little bit. So summer's pretty much behind us, heading into fall.
Well, absolutely. And I always am amazed that we always talk about weather right off the bat here in Texas because there's only one temperature in Texas during the summertime, and that's hot, very hot. So, you and I were up on a property the other day looking at a bunch of air conditioning units, and just reminds me that it's so hot in Texas, but, it's so cold during the winter times in Chicago or New York and things like that. So we have, the goods and the bads and the uglies and, fires out in California and Colorado and things like that. But we certainly do appreciate the great state of Texas and what it does for multifamily properties. What's your take right now, Mike? I mean, we haven't really talked about that. Thumbs up, thumbs down, sideways. What's going on with multifamily right now, in your opinion, in the state of Texas and also the country?
Been saying for months now that the market's white hot. So I got to find a new analogy because it's hotter than white hot. So whatever that is, I mean, it's every aspect you look at, Paul, it's just simply unbelievable. I mean, from, all-time occupancy highs here in the markets that we play in, all our properties, over 96% physically occupied. And for Texas, that's extremely high, right? We're a high supply market in general. So to be able to absorb all those units and still maintain such high occupancy, I mean, that's unbelievable. Our rental rate growth, both on renewal and new leases, are, in double digits. It's unbelievable. And that's pretty much the same story across most of the nation, with the high growth. And then you got, really attractive low interest rates still pretty much across the board. You got a robust lending environment. So you're kind of part of the problem too, Paul. So all the variety and cheap cost of capital for all the debt, you throw that plus the rent growth, plus, big population immigration to the Sun Belt, and Texas being right in the middle of that, kind of one of the leaders of that. You get, more and more capital chasing this stuff, and it's driving cap rates down. So it's kind of like a perfect storm. So whether you own it, you operate, you're making more cash flow, or whether you are wanting to sell it, you're selling for, record price after record price. So it's been an unbelievable market. I don't see what stops it in the kind of near to intermediate term. Something's going to stop it at some point, but probably slows. The rate of growth probably has to slow, which is simply unsustainable. But I mean, I don't see it for the next 2 or 3 months. Looking kind of at our forward renewals, we're typically about 60 days out on our renewals, and our renewals are renewing at high rates, at high retention rate, at a high rental rate. And it's not going to stop for, I think the rest of 2021 at minimum, just kind of looking forward at our upcoming lease renewals.
I mean, that's huge. I mean, especially getting these, people that are moving in, brand new leasers coming into the properties. I mean, they're paying top dollar these days, and the people that live in these properties that are coming just up for renewal at the end of the year term, that they're getting charged these big numbers to kind of stay in these properties, and so you don't see that pulling back at all. I mean, you guys have moved from the kind of C class up to the B plus, A minus stuff. What's the take of those tenants?
Yeah, we're even kind of out of the B plus. It's really just A minus to A plus at this point. And so, I mean, that's kind of the view of the world I largely see. We still have a handful of workforce housing deals, I think about 2 or 3 left in the portfolio, and those are the laggards. They've been leading, and now they're lagging in rental rate growth because I think we're just kind of bumping into some affordability issues on the lower end of the range of the apartment scale. The affordability issue is a lot more real, and on the upper end, they seem to have a lot more disposable income. I guess people are getting the white collar type jobs are getting a little bit better pay raises, and the blue collar jobs, I think that's kind of changing with seeing what some of our maintenance guys are commanding in the marketplace for wages. But we're even seeing more growth on the upper end of the scale, so it really kind of hits our portfolio pretty well. But I don't see what stops it for kind of the near to intermediate term. I mean, something's going to stop it, but I don't see what stops it in the next 6 months, 12 months. I just don't see it, Paul.
So we asked Mike because he's a former commercial real estate banker for one of the largest banks in the country, and he transitioned a number of years ago from loaning money to owning real estate. And so he is really boots on the ground. He's somebody that I listen to about what's going on in operations and what they're buying out there. And today, when they ask Mike Money, we're going to ask him actually two questions. One is really, I think, impacted or affected people in the last couple of years, and it certainly has impacted, homes with hurricanes or tornadoes, or rising rivers with flooding, or things that happen, whether it's earthquakes or fires, is insurance. So the question is, Michael, what's going on with insurance? What's your take about insurance these days?
Yeah, a lot of upward pressure. So all the good stuff I just mentioned, this is one of the headwinds. So I'm glad we're getting healthy revenue growth because the expense pressures really of last several years have been payroll, taxes, and insurance. And so payroll, certainly we're seeing some pressure on. Taxes in Texas, honestly, really haven't seen much pressure here. 2021 was a pretty decent year, to be honest with you, and we didn't really get hit very hard. I don't know with all these new sales if we're going to start getting reassessed materially higher in 22, but 21's been pretty good. And then, but insurance certainly has been a problem. It's going to continue to be a problem. The snowvid of about 6-7 months ago now, that certainly didn't help. The big Texas freeze that we had that, pretty much smoked everyone's landscaping and busted a bunch of pipes and caused a bunch of additional insurance claims across the great state of Texas. That certainly didn't help. And then, hurricanes and floods around the, kind of the southeast, and the wildfires on the west coast. I mean, those are, and we're building homes in the middle of the forest that used to not be there out in Northern California. So now they're getting the path of these wildfires and stuff like that. So yeah, it's just everything's going up on the pressure for the insurance. I think the other thing that is maybe a little bit overlooked is just, rising, inflation and construction materials and labor. And so the replacement costs of your building keeps going up and up and up. So that's going to put upward prices on insurance because it takes more to restore it and rebuild it just because all the input costs are up. So that has been a problem, and that's going to continue to be more of a problem. But luckily, rents are going up at the same rate or higher than your insurance costs. So that should hopefully offset it, at least for the foreseeable future.
Sure. Now, how do you guys do insurance? Do you guys have like a master policy because you have so many units? Do you tie into maybe your property management company that has even more units that they oversee and manage?
We have found a program, which I won't name on here, but we found a program that we actually do individual policies on all our properties. It's been pretty helpful, and that's been going up a little bit, but not at the same rate. Before that, we had a policy that was like a master policy. And even before that, I think we actually joined with the management company to try to get a little bit more economies of scale. So yeah, portfolio policies, generally speaking, are definitely helpful to keep the cost containment in a little bit because they spread it over a larger pool. We are hurt a little bit just being that our portfolio is 100% Texas. So if you have a portfolio policy and you're in, 5 or 10 different geographical locations, the risk is spread. But if there's a widespread like freeze like we had in February, it virtually impacts all of our assets as they're all located in Texas. So from a risk profile, the concentration is a little bit tougher. Obviously, all the other great things about Texas multifamily outweighs the one negative of insurance in Texas, in my opinion. But that is certainly a little bit of a drag that we have being so concentrated in one basic, state.
Any funny stories just for, learning and mentoring some of the folks that haven't got into multifamily? What should they be looking for? What if you have had a fire or a problem? Can you name maybe one or two funny stories when it comes to insurance?
How about funny? Usually they're not much fun because some bad's happen. But I remember one of the first bigger deals that we were buying was we were in escrow. We had hard earnest money, and we just ended up index locking. So we had 7 figures up, and at the time, 7 figures is a lot of money today, but at the time that was certainly a lot more money than we could ever afford to lose. And I was driving home the day after we rate locked on the mortgage. I got a call from our property manager, said that your property's on the news. That's never good. And there was a 3-alarm fire, a whole building burned down right in the middle of escrow. So learning, what the casualty and condemnation clauses are within your purchase and sale agreement or your PSA, your contract, that certainly came into play, and having to work through an insurance on your seller's policy and then have that assigned and over to you, and how do you work through that? that was certainly something that so that's when I probably started becoming a little bit more attuned to what does insurance mean and all the clauses, and certainly that clause within the purchase and sale agreement. So yeah, just understanding that. I think at the bottom line, the biggest takeaway though is making sure you have a competent professional involved. A good quality insurance broker is worth their weight in gold, much like property management, lawyer, accountant, et cetera. They're a team member on your team, and it's making sure you get a qualified person. And if you're getting a loan, usually your lender is going to have minimum insurance requirements, so they're going to make you put decent coverages on there. So I think they're kind of also a governor on you making too terrible of a decision, because they're going to let you make you buy minimum amount of insurance. So they should kind of protect you from yourself in a lot of ways.
How did you find your insurance person? I mean, a lot of people today, are putting together their team, whether it is their attorney or their due diligence engineer or some of the folks that it all takes, because it takes a family to put these deals together. But how did you find your insurance person? And you go back to that person every time, or do you shop it around? What's some of your advice?
Yeah, we shopped it. I mean, it's kind of referrals. So talking to someone else that owned more units than me at the time, and started to get some referrals. So we kind of started that way. We started with one guy, and then we ended up shopping him with one of my other buddies' brokers, and he ended up beating our original guy. And then we actually bought a property a few years back, and the seller had a different program that we thought was not going to work, but we ended up getting that one property quoted by his the seller's broker, and then all of a sudden he took over our entire portfolio because he beat out our existing broker. So just kind of continually shopping, and it's certainly something that you want to make sure that you get access to all the markets, and it's a little bit more of a complex topic than we probably have time for today. But starting like most things, looking at people that have been successful, who do they use, and starting there. That's kind of a success leaves clues, and that's usually if you focus on what successful people are doing, starting with what vendors that they use, that's usually a clue that it might be a good one for you to at least try out.
Are you up for one more question, Michael? I know we're going long here.
Let's do it.
All right. And this comes from Ryan. So we appreciate Ryan's question. Comes in. Hi, Mike. I'm passively invested with a number of different deal sponsors and groups, some that have in-house property management and others who use third-party property management. Full disclosure, I've done a couple deals with SPI too, and really happy with the results and looking forward to doing more. Could you talk about the trade-offs and how that will impact overall investment returns? It seems you get lower operating costs, including revenue management systems, lower insurance, with more units under management either way, but I see more groups going in-house to get more control of the property life cycle. I know you've been a fan of focusing on the asset management piece with a trusted property manager, which you've had a lot of success with, obviously. So I wonder how you're thinking about this post-COVID, where rents are up, but we're facing higher expenses to manage through rehab and ongoing operations. Thanks, Ryan.
Yeah, I mean, I think generally speaking, no one cares about your money more than you do. So I think all things being equal, maybe being fully vertically integrated maybe has the edge just for that reason alone. But we, as Ryan mentioned, we've never have taken property management in-house. We've always used third party, and we have basically one vendor that we're really tight with, and we're probably somewhere around, I don't know, they keep growing probably faster than we do, but I think we're probably somewhere around like 25% of their portfolio. Used to be a little bit higher. So, we're their largest account and very, valued relationship both ways. So I think that's kind of the next best thing. And that's kind of the choice that we've chosen to go down. We have, I think, 10 or 11 people in my company, Paul, to manage, about 7,000 units that we have right now. And if I was vertically integrated, I'd probably be, 150 employees with the on-site staff, plus, regionals, plus accounting and HR and all the other stuff you would need to do. So it's just kind of distracting for what I want to do. And that's not really, I don't think that's really necessarily my strong suit is, HR and construction. So I kind of try to outsource that. I really just focus on what I think I do well. And I think I'm a really good acquisitions guy, and I was a good banker before that. So I think I'm really good at kind of putting these transactions together and finding value relative to kind of current market conditions. So that's what I just kind of try to double and triple down upon. But, if other people have strong suits, I understand that certainly if you get with a property management company, you're not important to them, and or they're not the best. I mean, you can kind of have a lot of stuff slip through the cracks because they're juggling, a bunch of different owners and several properties and several locations. So I can fully see how, and I've had friends that have experienced, bad property management and have taken the in-house because of that. So I think, there's no right or wrong, I guess, Paul. It's just kind of what works for us. And if it works for the other people and they're qualified and have the skill set and talent to do that, I think that's great. But, it's very time consuming and distracting. So if they're doing property management in-house, it's going to be likely harder for them to go out and source good quality deals because they're going to be distracted and pulled in different ways. So nothing in this world's free. So if you improve upon the execution by taking it in-house, that works. That's great, but it's going to probably be at the expense of maybe finding more deals or maybe even the kind of the one that slipped through the cracks that maybe a group like mine that has a little bit more time can go pick up. I guess at some point, if you get so big, Paul, you could really hire a lot of that out internally and really scale it up. But if you only have 1,000 or 2,000 units and you're vertically integrated, you're kind of in no man's land. So I think if you take it in house, you really need to try to scale and grow and get as big as we are or bigger, so you can really hire high quality talent internally to run the day-to-day operations.
How did you find your property management company? Was that luck, or did you try 2 or 3 or 4 before you found this one? And what makes this one better than everybody else?
Yeah, we had, I don't know if they're better than everybody else, but I mean, it's a very tough business. It's a problem business. So they, got a good relationship, good high level trust. They stick with it. They work through it. They're not perfect. I mean, there's certainly, mistakes and issues along the way, but they're quick to course correct and, take responsibility, go work at it and, go course correct and figure out, whatever problems that are there. It's not in every deal we've ever done, Paul, like one of my sayings like to say is every business plan I've ever done has always been wrong. Every pro forma has always been wrong. You either do better or you do worse, but it's never exactly the way you think it's going to be. So once you get in it, you got to go figure it out and make adjustments along the way. I found them because when we started, we used one of my friends was with a smaller management company. We used them and they were just terrible, honestly, just pretty terrible at property management, and market was going up and we did well. And I had to kind of rush out over them to make sure we got stuff done that needed to get done. And it was just a lot of whack-a-mole with them, and they were just disorganized, and they were too flat of an organization and didn't have enough layers and accountability and people to throw at it. So they're really good if there's one problem, they go focus on it, but then they would kind of let everything else drop, and then all of a sudden you fix that one problem, but 2 more problems on your other properties would pop up. So it just became a little frustrating. So I met Valiant Residential, met them through a broker, kind of a mutual friend broker, went to an event, met them, and they were starting to go third party. They were just kind of in-house, and gave them a shot because we bought a property right down the street from another property they've owned and managed for a long time, which is actually on the market to sell right now for their property. And we, gave them a shot, worked well, really liked the communication level and attention to detail. And then we just kind of started growing, and they proved themselves to be a little better than the one that we were with. So we decided to kind of transition over to where we are today.
How much communication? I mean, that's one of the things you talked about, communication. How much communication do you have with a third-party property management? Is it daily? Is it weekly? Is it on only problems? I mean, talk to me a little bit about how you guys have that relationship.
Our asset management team talks to them literally every day, on something or another. So yeah, it's a daily thing. But I mean, we'll have 25, 27, I don't even know how many assets we have anymore, Paul, 25 or 27 assets presently. And so, yeah, there's always something going on over 7,000 units. There's, always, like I said, it's a problem business. There's always a problem. So constantly working on that and making sure, setting rents and et cetera. So, my asset manager has, some level of communication virtually every single day with them. Me, probably every other week because I'm, built out my team, my platform. So I'm talking to my asset manager. And then he does what direction we set from on high. He'll go out and give it to the management company, make sure it gets implemented. So I'm probably having, we do like a biweekly call to kind of directly with the management company that I'm on, but daily from my asset manager on my team.
Well, that was Mr. Problem Solver himself, the great Michael Becker. So thanks, Michael, for spending some time with us on that. If somebody wanted to kind of understand a little bit about what you do and what the group that you put together called SPI Advisory. What do you guys do, and how do they get a hold of you?
Yeah, go to our the easiest way to find more information is go to our website, which is new and improved. We actually finally, after 7 or 8 years, got our crappy website and improved it. So we're still going to continue to improve it and evolve, but it's much better than what it was. It's spiadvisory.com. That's SPI like spy advisory.com. There's a bunch of actual information about what we do now instead of kind of a more opaque website that was there before. It shows our portfolio, all the transactions that we've done, both current and past projects. You kind of get a little bit more information, good bios, et cetera. So just go to our website, SPI Advisory. There's also a contact form on there where you can send us fill in information, get into our investor database, and learn about future opportunities, which we hope to have another one put together before 2021 is over. So we're actively working on that now. So hopefully have some good news to announce in the not too distant future.
Fantastic. All right. That was Michael Becker. I'm Paul Peebles. Have a great day.